Good morning, traders. Welcome to the TMT Daily Strategy video for Wednesday, February 28th. Last day of the month. We will see if we get that window dressing that we usually get every month. Hasn't happened today because we had a risk on, a risk off event, right? We did have a risk event, which was Fed Chairman Powell speaking, and I mentioned that yesterday. I said, you just got to use a little caution. We had many times when other Fed governors would speak, especially the new Fed governors, actually, when they first take their term, markets get a little bit antsy, and that's what happened yesterday. Markets sold off. Well, the main reason why the market sold off was because he was hawkish, and he never really stood down on his 4 rate hikes. So markets really didn't like that, and yes, of course, they're not going to like it because the free money is gone. The money that's been piling into this market since 2009 has officially ended. So what does that mean for the markets? Well, the markets are inflated, overinflated, basically, on what the Fed has been doing, what QE 1, 2, and 3. That is not a good sign for where we are, where the PE ratios are. I mean, I can go on and on. So the market is overinflated. The markets are very expensive, and the markets still are overbought based on what we had just the last couple of weeks. So we get a V-shaped corrective rally, which I mentioned that is corrective, and we have an outside day reversal distribution day, right, where the markets took back everything it had from yesterday's rally, from the previous day's rally, excuse me. So that's not a great sign, but today we have to have that follow through. We have to take out, and I'm going to show you important areas on the chart for today's trade so you guys can obviously make educated decisions on your trading. I do like the way the price action is, and I did mention that we will have a corrective rally today, which is Wednesday. We could actually turn around and just move higher. That is very, very possible. I mean, the markets, volatility is here, guys. I spoke with a few of you, and you guys are doing great. And I'll tell you, I'm very excited that all of you are doing great. As a matter of fact, we've added a coaching program where we would mentor in the one-on-one individuals, and we've been doing that. And we tailor it to your needs. So it's basically, hey, I'm an experienced trader. I'm having problems with this. Great. We look at it, we identify the problem, we correct the problem for you, and you move on. Right? There's no subscription or anything like that. You can do as long as you wish. So really, you should give us a call, give us a shout, an email, support@tradingmarkettechnicals.com. It's a great way of starting your day. Remember, you guys are running a stock trading business on your own. You're running your own money. So if you're having difficulty, or maybe you need to find new ideas on how to trade, like we were showing you with the utilities and the integrated oils when they moved up the last few days, big time. So these are the areas of what we would show you, and of course we would tailor on your needs. So if you're interested, give us a call. You can email us as well, support@tradingmarkettechnicals.com. The research videos, our levels are doing fantastic. The trading room is really killing it with the algorithm, so it's really doing well. I'm glad that everybody's doing good here. But remember, let's not get complacent, right? Because we're making money. That doesn't mean, hey, you're going to have your sour spots as well. So we'll see what happens today. Now, again, we do have some mutual fund inflows that come in. Yesterday we had a little over $1 billion for sale on the market, and then we had $1.2 billion, I think it was, the day before. So money's coming in for sale instead of to buy. So that's interesting, very interesting. And we're really at a sweet spot in the market. So let's dive in. All right, so we have the VXX, and I mentioned that this is a hard short to get short. I'd rather be a better buyer on deep pullbacks and start building a small little position. And this is the instrument that I would build a position in, VXX, and only VXX. I wouldn't do it on any other UVXY. I wouldn't bother wasting my time with that. But yes, the VXX, you can see we're back above the 50 percentile. So let's see if we get to move higher. I definitely think volatility can move much higher. I think the VIX would have had an 18 handle today at one point. So still extreme lows, not as low as we had at 9 and 10, but we're still low enough that we can actually go much higher than the VIX. Okay. Now the ES, you can see here we have an outside day reversal. Big red candle, took back everything that we had the day before. Now, this bull flag that we've identified that actually triggered, right, measures up to here, 2086. Does it have to get up there, guys? No, of course not. We could actually start to move lower, and that could be it. So especially when you have a V-shaped corrective move, we could easily just start to turn around and go lower again. All right, so this is very important. The rest of this week is going to be very important to determine, is this over, this corrective rally over, and this bull flag starts to fail and we head back lower, or is it just a temporary omen that, you know, we just sell off because of what Powell was saying and everybody just kind of shrugs it off and moves forward? I think not. I would tell you that to be a manager, and I hear it as hawkish statements that we're going to get 4 rate hikes this year, I would be very, very cautious. And on top of that, interest rates really started moving up again. And why not, right? If they're going to raise rates, the yields are going to go higher. So, and you know, rising yields is not good for stock market. It doesn't matter. I don't care what anybody says. So be careful. So outside day reversal, we did catch the upper end of the TMT proprietary price channels here at the 27.45. The lower end is going to be coming in right here at the 27.03.48. That'll be your next bigger area of support, and then of course that 27.11 here, right above the lower end of that TMT proprietary price channel. Okay, NQ again, outside day reversal, secondary leader here, and I think that we're going to have a tech wreck, and I mean a tech wreck. Why? Okay, well, we talked about. I showed you the Facebooks and the Apple. I'm not going to go through them again. I think Netflix here. I'm really liking Netflix here. Really has to show it today, but if we could take out the interim low the last 2 days and take back that gap up from the double top in Netflix, and let me just show that to you real quick. If we could take back this line here and make that resistance at 286, I think you're going to have a decent little pullback in Netflix. We talked about the overvalue, the valuations are through the roof, the PEs are through the roof, and their burn rate is ridiculous. I'd rather own a Roku, an ROKO, even though it got battered. I would buy any deep retracements in that, and I would look to sell the FANG stocks at one point. Now, each individual FANG stock is going to have their own sell trigger, right? Facebook is the weakest of the bunch. That really triggered. Netflix here, I'm looking for a pullback and break below, and we'll see if that happens. If it doesn't break below and holds this line and starts to go higher, then obviously there's no trade. Okay, unless you dollar cost average a short trade and just go really slow and small, and then you wait for that turn. You could definitely do that, but we are looking for the FANG stocks to move lower. The NASDAQ, the stocks above the 50-day moving average, yeah, it definitely went up higher than where it was before, but not even close. So the internals of the NASDAQ are weakening as we start to rally, and we've rallied all the way up here from the lower end to all the way up in here, basically a double top, and the internals are not supporting it. So and you can see the RSI, you can see MACD, we're way below here than where we were here before the sell-off, right? So this is just alone in RSI. If you're looking at RSI, the relative strength, there is no relative strength here at the moment, right? It's weak. So this is something that I'm really paying attention to, and I'm really looking and excited to start shorting some FANG stocks. Again, we have to get a sell trigger, okay? Based on your trading plan, my sell trigger may be different, but I will also tell you when that we get a sell trigger as far as the NQ is concerned, and of course, you know, our Netflix trade. Gold, we talked about gold weakening, and sure enough, yes it has. It's been weakening, and now we're basically at the cusp here of breaking down in the GDX. This one here is going to be the line in the sand at 2168. We lose that, we'll flush right back down to the 1913. So pay attention to that as well. 2299 will come in as decent resistance if you wanted to short that to get a short off. Okay, you can see the GC contract here barely holding the 1318. We break that, we get to 13, we break that, we should get down to around 1250 to 1270, which would be a start of a good dollar cost average long trade in gold. I love gold long for 2018, and if we can buy it much cheaper, I'd rather buy it on pullbacks than buy it up in here. Okay, next is going to be crude oil. Now, crude oil had a great day yesterday. Now, what happened is we sold off, and the API number that came out yesterday night wasn't positive. So we sold off again. Now, last week's numbers were great, was fantastic. Today, we have the DOE number coming out, right? The EA numbers come out at 10:30. If they don't confirm from last week, and we get a build, which I'm hearing from the NYMEX, that some of these oil traders are expecting to build. If that's the case, guys, look out below. We should sell off pretty hard, and those oil stocks that rallied, like a Chevron that we picked off last week, which had a great stellar trades in the last 3 days, now reversed yesterday at the end of the day. Okay, and this is why. This is the area I said that if anything, we're going to look for the 114, 115 area. Why? Because we have supply and demand up here in our volume profiles. And sure enough, look where it happened. Bam, right to the target, and we started to reverse. So just, technical analysis works. You got to just find your system that works for you, And if we can help out here in any way, this is the reason why you're here. Crude oil. Let's look what happens tomorrow. I'd stay away from any oil stocks until the number is released. Remember, it's not the number, it's how the markets react to that number. Very important to understand that. TLT, we showed you yesterday about bonds, how we're stuck on the lower end of that weekly trend line, which we should get a reaction to bonds. We didn't get it today, but let's see if we can get some sort of a rally, a hard rally in bonds. That could be possible. Okay, so the 21 EMA will come into play here at 119.12. Your 50-day in red, 121.68, and then of course the 21 at 123.68. All right, so let's take a look at the ZB, and the same thing with the ZB here. We were looking for. Let me just tighten that up a little bit. We are looking for a retracement. I'd like to see us get back to the 150 area. That would be an ideal short situation. You can see here our volume profiles, real nice and heavy. I wouldn't actually short it down here. If we take out the swing high here, a 144.29, yeah, I would probably be inclined to take a long trade with a tight stop. Why not? Get that retracement rally under your belt and then start looking for a short position. Again, I do believe that bonds have ended its bull market run for the last 30 years. That's for sure. Transports, our leader. Outside day reversal, big time, rejected, right up in here. This is a big thing here, guys. This is no joke. We lost the 50-day. We barely closed below it, but we did lose the 50-day. That's for real. So now we need some traction, right? Now we need some traction. If we start to sell off again tomorrow, and we really confirm that low from yesterday, that's going to be pretty much kind of like the line in the sand here that now, okay, we'll probably head it back down again. So I'm not going to get too crazy about it. Today's going to be tricky because the fact that we had an outside day reversal. I want to see the lows on each index that I'm showing you get taken out on a closing basis. If we could do that, then I think we're headed back lower to at least test the lows, and then we'll go from there. Right? We don't want to get too far ahead of ourselves. Spiders, outside day reversal. Picked that right off, and sure enough, we caught that 61.8% retracement, and let me just move this a little bit over so you can see that 61.8% at 273.98. The next spot, which is a big area here, a big area in the Qs, in the spiders, is going to be that 270 right there. If you notice that 50 percentile lines up pretty good with the 50% retracement as well as the 271.10. That's why I have it marked in a dash horizontal line. If we lose that, I think that'll be the end of the bull flag, and I think we started to head lower. Okay, and that's why I wanted you to write that down. Really important number there. That number is pretty key and pivotal. 270. 270. Next is going to be the Qs, and again, rejected. We had a nice double top off the Qs, right? Double top, rejected, outside day reversal. The thing is with this, we filled the gap here. Now, do we go higher? That's yet to be seen. We do not know that until later on today. But once we fill that gap, now do we at least test the 61.8% retracement, right? Or do we just start to go back higher? I think the markets are getting tired. I think the markets are in trouble. You had Powell speaking. He spoke a little hawkish, but it really wasn't. He did a great job. I think he did a nice job. Nice, easy-spoken individual. Talked about the economy, talked about rates. And I don't think he did anything wrong to spook the markets. So if the markets are looking for a reason to sell, well, there you go. That's your sell. And we'll see if we get another push lower. Okay, Diamonds Daily, which is the Dow Jones ETF. You can see that, again, another outside day reversal. We held the 61.8%, so that'll be your line in the sand for today, 253.83. Okay, and we're looking for lower prices. Your next target area will be that 249.49, which is the lower end of the TMT proprietary price channel. Okay, those numbers off the daily chart. Okay, Russell 2000 really had a horrible day, the worst out of the 5 indices that we follow. This is our secondary leader aside from the transports, and look at the size of this candle. And I told you guys, when we start to really go, the first thing they're going to sell is going to be the Russell. They're going to sell technology, and they're going to sell banks and financials. Those are going to be the 3 to go, and they're going to be hard and fast. So look at this. You can see that here. We had a big, massive down day, massive outside day reversal. RSI already gave us a sell signal. MACD not as quite, but again, look for that 150, 102 to be your main support. And then we have this little Fibonacci cluster here that we put together right around the 150. Okay, your resistance will be yesterday's high, and then of course the 76% retracement in the IWM. Okay. All right, now let's get right to the intraday, and we've got the intraday levels here. We did get the gap fill in the ES from the bull flag that we had today. So this gap fill area, this is what I'm saying, is very important. Also coincides perfectly with the 61.8% retracement of 27.43. Does it hold? That's the key level here. If we don't hold, look for these areas here of support to hold, and if not, 26.71 will come into play. That'll be the 38% retracement right underneath that, right on top of that. Resistance will come in at the 27.89, 27.69, all the way up until the 27.93. Okay, that's going to be the ES. NQ, again, had the gap fill. You can see that we fill the gap. All right, now it's where do we go from here? And we don't know that until we start to trade again, and we start to open on the exchange. So 68.33, 67.99, and 67.66. Those are your areas of support. Resistance comes in at the 69.32 all the way up until the 69.58. Okay, that's going to be the NQ. And gold, that's that big area here. It needs to hold. If we don't hold the 13.14, we're going to go down to 1300. All right, and your resistance area will be a 38% retracement, which is the 1336, lines up perfectly with our algorithm resistance area. Okay, so keep an eye on that. Again, I'm a better buyer in gold. I'm not looking to short it. Here's crude oil. Right now, crude oil, we were down, and now this is the close, end of day. Now we were down on that API number. Let's see what happens today. But we had that nice little bearish rising wedge, and we broke out of that wedge for today's trade. So this is going to be really interesting to see if we shoot all the way back down. That 38% retracement here at 61.20 and 61.12, that'll be a big cluster of support. Okay, if you look at the buy pullbacks, resistance comes in here at the 63.23 all the way up to 64.05. All right, that's going to be your area for today's trade.